Hey Shane, how's it going?
Kyle, it's going. I'm busy and I'm looking forward to this year being over, coming to a close. How about yourself?
The same. So we've got a volatile market this week, which no surprise, hardly anyone's on the trading desk and you can move some stuff around. But I'm just ready for a new year and new price action. So, for anyone watching today's December 29th, 2022, and please like, subscribe, throw some comments in there and just let us know maybe if there's a chart you want us to cover or just other general market questions or anything of that nature. So, yeah, I'll go ahead and flip it over and we can start going through some charts like we normally do.
Sounds good.
All right, so let's go ahead and get into it here. And first things first, S&P 500. So we got the SPX up, represents that. And I don't really have anything new to add here. It's just been a textbook rejection of this downward trend line all throughout. We're under the 50 and looks pretty weak, but I said it last call. We'd probably get just little bounces in here. It's not just going to fall in a straight line. It looks to me like it's consolidating and getting ready to make that move lower. What do you see, Shane?
Yeah, I mean, we're in a downtrend. We're stuck in the downtrend. It does look like it's trying to set up a bounce here. And maybe put in kind of a more material higher low than we've seen in a while. Not too surprising, really. I'll be surprised if it gets above 4,000 and holds up there above the downtrend for any length of time. But I would not like you. Yeah, I wouldn't be surprised to see a little bounce. Maybe I don't know. We got what today and tomorrow. Everybody's probably getting real excited because today the S&P 500 is up 1.8%, and it barely even shows up, as a green bar on this chart because it's just who cares, it's not even that big of a deal. Like you said earlier, on low volume, the SPY's traded 41% of its average daily volume so far today, and we've only got 3 hours left to go in trading. So volume seems a little light for a big up day like this. Um, so yeah, I wouldn't put a lot of faith in a bounce. Not a lasting bounce, but a little bounce. I don't know if it's even tradable, for the short-term traders out there. I just think we're stuck in a downtrend, heading into a recession, profits declining, inflation painfully sticky and high, Fed tightening into, the slowing economy. Uh, Unemployment seems to be ticking up. I don't know. There's not a lot to get excited about at this point for a material, bull run. So, yep, I just see a little bounce in the midst of a bear market.
I agree. And when you flip to the next chart, we just highlighted some of the key levels. So year end 2020, that's right down here where we've bounced a little bit. And then those pre-COVID highs, I think, are even below that. So
Yeah. Hey, the SPY and the last chart we looked at, the SPX, both representative of the S&P 500. These look like bullish charts compared to the QQQ or Nasdaq 100. So we'll see that in a minute. But yeah, I mean, it's still just putting in, lower highs below the 200-day moving average, now below the 50-day moving average. Still pretty much erased all of 2021's Fed fueled bubble and everything gains. The mother of all bubbles has popped with Mr. Elon Musk and Tesla at the center of it, down like 70% until this morning. So yeah, looking pretty nasty out there. Man, the Qs we're gonna see in a second just looks even worse.
yeah, so here they are.
Whew.
This is just a chart that looks just terrible, but there was this little bounce here. But this is something for the expert traders, and I don't really even want to jump in this category where you get that nice bounce. And today it's looking great. It's up what
Well,
2.6%,
can,
but
can you do you how I don't know how far back your memory goes. I don't know if you got like one of those elephant brains. You can just remember everything forever. But even I can remember yesterday. And yesterday, that little red, that
right
red
there.
candle yesterday, that was a fresh 2022 closing low, for the Qs, the Nasdaq 100. So literally, just yesterday was the low close of the year for the Nasdaq index. And I'm telling you, if you're on Twitter or if you're on any of these other financial media, if you're watching CNBC, they're probably getting all types of excited about the 2.5% rally in the Nasdaq today. Woohoo! Like literally yesterday was the closing low for the year, and suddenly today, everything's different and we're in a bull market. I think not, to be honest. I mean, that's financial media for you. You know, yesterday was the end of the world, and today is the beginning of the new bull market and everything probably. And the Fed's gonna pivot to save the day again. No, they're not. They're gonna raise rates, I promise.
Yeah.
I shouldn't promise. Those you can't really trust those guys as far as you can throw them, but I think they're not done hiking rates. Inflation's still crazy high. We'll get to some other charts related to housing in a minute. There's just not a lot to get bullish about here. Although one chart we didn't put in, maybe we should have. Amazon. Amazon was within like $1 of its COVID low price yesterday. I think Amazon's COVID low price was $81 and 30 cents, and Amazon closed yesterday at oh shoot, where is it? Sorry, give me 1 second. This is worth actually mentioning. Yeah, so Amazon's COVID low is 81.30, and yesterday it closed at $81 and 82 cents. So, about 50 cents from its COVID low. And granted, there's been a split that's happened in the interim, so it wasn't exactly those prices if you go and look at it. But yeah, I mean, it's that might be worth taking a stab at because Amazon's just been decimated. From its all-time high to that COVID low was 57% down, so I think a lot of the pain that Amazon's going to feel may have already happened. So I got a client he was like, hey, let's buy Amazon. It's under 100. And I said, well, dude, just because it's under 100 doesn't mean it's not going to go to 80. And he promptly says, well, put in a limit order for me to buy 100 shares at 80. So I did, and it almost hit yesterday. And now I'm concerned that that might be as close as we get. And so I'm probably going to call that guy today. I've been meaning to call him all morning and tell him, maybe buy 50 of those 100 shares here and see what happens. Because, I don't like picking bottoms. That's not my thing, as people know. But I'm also not an idiot. If you can get a good company at a decent valuation, um, and you want to hold it for the long run and you're not trying to trade it, I mean, you could do a lot worse than buying Amazon at $80. You know what I mean?
Yeah.
So I think that one might be worth taking a stab at. And if it keeps going up, maybe add to it. And if it breaks out, add to it. And if you get filled on the rest at 80, put in a stop loss at 70 or something and hold it for the long run. So anyway, that's all. Sorry. We
I,
should have put a chart in for that.
yep, I agree. So, and Amazon too, they have good business, but Apple, that's the other one here that the darling of the tech industry. And yesterday, what an ugly candle it put in. Today we're kind of reversing, but we have not taken out yesterday's high, and it's only one day. I still just see an evolving downtrend. And think about Tesla. It looked a lot like this chart, just one big rounding top,
Yep.
broke down really hard. So,
Yeah, last week when we were on this call, we had just barely, I think, broken down below that purple line. We hadn't yet gotten to the 129.04, low from what I guess that was probably May or June. And now we blew that out yesterday, in I don't know, in kind of really ugly fashion. Closed on the lows and everything. Like that's an ugly candle from yesterday. It's nice to see it gap up a little bit and climb today, but again, it's low volume. The thing's been getting smoked. It's no, things aren't going to go straight down. Even Tesla's getting a bounce today.
mhm,
So, bounce is a bounce. Bounce is not a bull market. It's a bounce. Sometimes it's just a really good opportunity to sell something you wish you had sold before. A lot of times that's the case in a bear market. But I wouldn't be surprised to see this thing jump to 138 again. But here's the deal, man. I mean, we're below 138 now, like decidedly. Um, it certainly could rally all the way back to 182 without stopping. Like that's not out of the realm of possibility. But you also have to consider the fact that that 138 line was resistance, back in 2021, 1, 2, 3, 4 different times, Apple failed to get above 138. And now there's just a lot less money out there chasing after these stocks. They're not printing more and pumping it, and you can get 4.5% in a 6-month treasury bill. So you don't really have to go get Apple now. So I mean, I think we're stuck below 138 for a while. We'll see. I'm open to changing my mind as the facts change and new information becomes available. But I wouldn't rule out that gap all the way down there at 100. Still, I think that's in
Yeah.
play. It's more in play now than it has been all year. And even if we bounce all the way to 138, if 138 holds as resistance, look out below, man, especially if we start getting some ugly data in early January. You get some companies pre-releasing bad news, slow shopping season, Fed hiking. I mean, there's a lot of bad news that could still be right around the corner. So wouldn't get too crazy optimistic about buying it here. And it's nowhere near its COVID lows like Amazon is. Nowhere
Yeah.
near. So
And this one, Shane, the level you're pointing out, this 138, we've hit so many times. Now,
yeah,
for me, it's guilty until proven innocent. It
there you go.
has to close above that line. Otherwise, there's just no good reason from a risk reward standpoint to be jumping in here and expecting it to break that line.
Yeah. And if it does go above and then back tests it, as support, that's a great buying opportunity for a long-term run. It's, that's worked a whole bunch of times. So
Yeah.
yeah, definitely something to keep your eye on. Maybe we'll keep the chart in here for a little while longer, but for now it's looking a little ugly.
Yep. And then ugly charts. Tesla
Oh,
is the poster child. And this is, like I mentioned, Apple looks very similar to this. If you go back and look at it and cut
yeah.
out this large sell-off, pretty
Mm-hmm.
similar chart. And, you thought Tesla, oh, it can't go lower. And
No,
then
dude, in
here,
September, this sucker was back above the 200-day moving average, and I couldn't talk people out of selling this thing at $300. Now it's $100. Like, think about that. I could have, everybody I talked to would have easily bought Tesla at 300 back in September. What, Elon Musk, Tesla, it's only $300. It used to be thousands before it split. I could buy it for 300, and I'm like, you could short it for 300. That's probably what you ought to do. I seriously, I mean, I'm not trying to even take a victory lap, I guess, but like I talked to more than one client out of buying Tesla at 300, and I talked more than one person out of buying it at 200 too, recently, and I mean, I don't know. It's not gonna go. I don't know. I shouldn't say it's not gonna go to zero. It could be a total fraud. I mean, why not? Sam
well,
Bankman-Fried is a fraud.
yeah,
FTX just went to zero, and that was the crypto darling. So why can't Tesla be committing fraud too? I don't know that they are, but there's a lot of people out there that think they are and have been.
yeah. And the big thing to remember is, we're not out here, we're not, was it Muddy Waters Research or a large short fund that comes out with these revealing reports. But the key thing is here, Enron, you can go back and look at that. And if you only look at the chart, it's the same thing. It's the best chart you've ever seen. That was the best company to work for, the best company to buy in its day. And the news came out after the chart broke. So
Yep.
Tesla, not saying it's going to happen by any means, but when a chart starts breaking like this, you don't know when it's going to stop. So
No.
why try? There's just much easier trades or investments out there.
That's funny that today's candle on this is red, even though it's up 6, 7%. So it opened higher, and now it's trading below where it opened the day. So see, that's a perfect example of like you get a 7% bounce in a stock that's down 70, 80%. A lot of people who haven't sold it yet are like, now's my chance. Let me out. Get me out. I at least got 7% back. I'm selling some shares. Where's the sell button?
Yep.
Um, but yeah, dude, Apple looks like a bullish chart compared to this turd. Holy smokes. I mean, like you said, we're not muddy waters. We don't take a big short position and then start calling names like fraud. But boy, do I wish I was short this stock. I've shorted it many times. I've done fine trading it. But I haven't gotten really much of a good piece of this last drop, which is very disappointing to me because I would have loved to have been short this thing since about 300,
Yeah.
certainly since 200. It was just like, look, I mean, this thing breaks 200 to the downside, it's going to 100, and I'd be surprised if we didn't talk about it on this call that's what was going to happen, but I just never
Mhm.
traded it.
Yep. So one ugly chart, but why don't we turn to a rosier chart? So in the context of a bear market, you might think, oh, I should just stay away from all stocks, but that's not the case. This one right here is a very nice looking chart. Everything's pointing up. It's moving in a nice pattern. So Shane, why don't you tell us about this chart and how they're innovating their industry?
Well, I'll tell you what, I don't know how many stocks I've lost count actually of how many stocks in the Elevate strategies have hit an all-time high in the past couple of months, but it's more than 4 or 5. Not much more. I don't think it's 10. But at least 4 or 5 have hit new all-time highs in the past couple months. Hershey is one of them in our value strategy. Um, Hershey is, like Kyle kind of alluded to it. They're not doing anything different than they've always done. They're making chocolate. I mean, they're making chocolate, making candy, producing it, sending it to people. They're raising their prices to keep pace with inflation. They're not building any new factories. They're not innovating and trying to come up with a new story for people to buy. They're just operating and doing what they do, paying dividends, selling candy, not capital intensive at all. All they got to do is maybe operate the factory for a little bit longer every day in order to produce a little bit more candy. They got to raise their prices. What are you going to do? Not buy like if you're a Hershey bar kind of guy, or you like have a brand of theirs that you favor, are you going to really switch your brand, because they raise their price? No, like if you like candy, if you like this certain thing, that's what you're going to get. And maybe you'll buy in a little less frequently if the prices go up, or if you don't have any money. I get it. But this is what they do, and this is why their chart looks like it looks, is because it's just stable. It's a staple.
Hmm.
You're gonna be, if you like Hershey, you're gonna be getting Hershey. Like if you're gonna go camping and make a s'mores bar, what are you gonna do? Not get Hershey? You're gonna have the s'more without the Hershey bar, just marshmallow and graham cracker? I don't think so, man. It's not gonna work that way.
Yeah.
And at the end of the day, like if I asked you, what are your grandchildren more likely to want? An iPad or a Hershey's candy bar, Hershey's chocolate?
And
I'm
that
I'm here to
chocolate
tell
bar
you,
every time.
yeah, it's a chocolate bar, or it's a Coca-Cola classic, or whatever that might be. Because by the time my grandkids are looking for iPads, like iPad's going to be, you know, an old school. They're going to be like, "What? You still use an iPad?" There'll probably be something way cooler than that by then. But Hershey ain't. They're not changing their recipe. You know. So this is a great company to own for the long run, and you put the right stop loss percentage on it, you probably never stop out during any bear market or drawdown. And technically, right, like this isn't a trading stock. You're not going to like buy breakouts and sell breakdowns, but you can tell when to maybe trim your position back, or maybe when to add more, because it does behave technically very well. I mean, you can see some of these levels that are drawn on the chart when they break out, they keep going higher. And sometimes like that yellow line, right? It took a while. It kind of got rejected off of that yellow line, dropped back towards the 200-day moving average. Once it broke above that yellow line, though, it never really broke back below for too long. It's bounced higher off that yellow line few different times now. And it won't surprise me if Hershey eventually trades back down to 210 or something like that. But that'd be probably a good buying opportunity for a company that's not going anywhere, pays a strong dividend, has really sound financials. So
Hmm.
chart looks good, fundamentals are good. It's boring. It's a perfect stock for a recessionary bear market.
Yep. And then here's another one you've pulled up. So General Dynamics. Really like this chart. It's just, and these aren't the tech darlings that were racing higher, but in a bear market, you're not trying to get rich. You're trying to preserve capital. And if you can earn some money along the way, that's great. But General Dynamics, just another one here where it keeps, you kind of consolidate here, break out,
Dude,
consolidate.
General Dynamics is up 19.58% year to date.
Yeah, that's
Think
good.
about that. That's crazy. I mean, I just put all your money in that. You'd be having a great year. I mean, it wasn't without a little bit of volatility. But it wasn't crazy. I mean, the biggest drawdown that this thing had was 18%. from, I guess, March down to like July, and then got back above the 200-day, broke out. That's right around the time when we bought it. We took our long position on July 28th, right when it broke back above the 200-day moving average. And see how the 50-day moving average, the red line, got real close to the 200-day moving average. Like with those,
Yep.
that's like my favorite thing to look for in a breakout, especially like a long-term breakout in a boring defense stock like General Dynamics. It's like you don't often get that much compression in the major moving averages. And when they get that close together, chances are they're then they're going to expand one way or the other, right? So you get these contracting phases where the moving averages tighten up, and then you get these expanding phases where they spread out further from one another. And you never know which way they're going to expand. Like this thing could have dropped from there and went down, but once it broke there's a breakout along with very tight moving average of the 50 and the 200-day moving average. To me, the breakout and those things being that tight led me to believe like, hey, this thing's probably going to go higher.
Hmm.
Um, and then, in October, we were actually down on that trade for a little bit, for a few days, but it recovered quickly and just kept going higher. And the 50 days never dropped below the 200-day. So you never got that death cross. The 200-day has continued to just go higher. Like that light blue line doesn't ever point downwards at any time during, what's on the chart here. So like that is the trend, and the trend is just up. It's hard to find things that are trending up in a bear market. This is one of them. A lot of other defense stocks look just as good, if not better. So like Lockheed Martin, Northrop Grumman, NOC, LMT is Lockheed Martin. But General Dynamics pays a 2% dividend. Balance sheet strong, valuation's good. Um, Government's not going to stop buying jets, despite the fact that the government's totally broke and bankrupt. And now, if you look at this thing, I mean, it's putting in higher lows in alignment with the 50-day moving average, and looks like it wants to break out of that, above that purple line we've got drawn for today. So might make another new all-time high in the next month or two. If you look at the MACD, the momentum at the bottom looks like that's about to cross from negative to positive. I mean, it's been showing negative momentum since early November, and it still hasn't really dropped below the 50-day moving average. Like that's a strong stock.
Yep.
There's somebody or many somebodies out there accumulating this thing, and yeah, I'm not opposed to being one of them.
Sounds good, and I agree. So nice looking chart, and just shows that even in a bear market, you're still going to find some names that are doing well.
Yep.
And back to just the commodity side or kind of macro level. Here's oil again. I don't see anything remarkable. To me, this looks like just another little bear flag. I wouldn't be surprised at all to see oil come right back down around here and just consolidate for a bit. But
Yeah. Looks like it
again,
ran into the 50-day and now it wants to turn lower. That's what I see.
yep. So just nothing great there for a trade. So we'll keep going back to that one, but for right now, just nothing pointing higher or lower convincingly. So
I do think there's a limit to how low it can go with the government
yep.
needing to replenish their strategic reserves, and they said they were going to do that around $70. So I do think there's kind of a Biden put in there, if you want to call it that, a White House put. Um, so I think there's a limit to how low it can go. But if it breaks below that, who knows? All bets are off.
Yeah. And then here's the 10-year yield. So this one's been perking up quite a bit, which has helped the inversion of the yield curve, but it's still not really a good thing to have higher rates. So yeah, if you want to trade bonds, nice looking chart here, but not really bullish for equities.
No, I mean that the 10-year yield as it was dropping, kind of made people want to go buy tech stocks, and that's what caused the most recent rally, which ended up failing. Um, so this is the 10-year yield, not the bond. So this is the interest you can earn on buying a 10-year. So as that's ticking a little higher, that's putting some pressure on the stock market. So
Yep.
looks like it, it might be taking a breather here, but back above the 50-day moving average, still kind of making a new lower low. Um, so we'll see what happens with the 10-year. Wouldn't surprise me if it drops a bit, maybe back down towards to the 3.4 area. But I also won't be surprised to see it put in a new high. So kind of a toss up.
Yep. And then on the 2 year, this one, again, rates looking like they're moving higher. This looks like just a wonderful little consolidation right here. I'd be buying that if I could.
Yeah, if that was a stock, I'd be loading up on the long side probably, especially if it gets above that 50-day moving average.
Hmm.
But I mean, this still, the yield on the 10-year was 3.83. The yield on the 2-year is 4.36. So you can still earn more interest loaning money to the government for 2 years than you can for 10 years. And that's a negative spread of 53 basis points. So, I mean, that signals a recession on the horizon and probably higher rates across the entire curve. That's probably what's going to happen. So,
Yep.
we'll see how it turns out, but none of that's bullish for stocks or
Mm,
bonds for that matter. I wouldn't want to be buying bonds either.
nope.
Only very, very, very short-term U.S. Treasuries. That's the only thing that we would touch.
Agreed. And then here's the other one. So this is the US dollar. Usually rates going higher, bullish for the dollar. A bullish dollar is not bullish for equities, historically, but right now this one, it looks like maybe it could try to go a little higher here, but this is one I'd say it's a coin flip. It looks kind of weak and it might even break down a little more from here.
Yeah, it looks weak to me, especially if you bring in the momentum at the bottom into play. I mean, it's already been showing positive momentum for like, all the entire month of December, yet it's
Hmm.
done nothing but go down. So what's going to happen if it starts showing negative momentum? It's probably not going to start going up all of a sudden.
Yep.
So I think best case scenario for dollar bulls is that it just holds this 103 level, probably for the next few weeks, and then maybe stages a rally from there. But I think it's more likely that it probably drops back towards that 101 level um, over the next couple of weeks. I like, and that's good for stocks. That's, a lower dollar is going to be wind in the sails for the stock market. So that's one thing that you can kind of put in the bullish category is the dollar is down and seems to be dropping. If the dollar starts rallying from here, though, oh man, look out. Stocks are going to go way lower.
Yep.
Um, so yeah, I don't know if the dollar could go all the way back to 114, you probably see the stock market another 20% lower from here.
Yep. So, and then this we always like to just bring up is a 60-40 portfolio illustration. And for 2022, this is probably where it's going to finish. So I think this number will stand pretty close, but
Yep.
down 19%. So owning those bonds as a diversification tool was I kind of flawed, really. I don't think there was ever a long enough track record to say that's a great way to go. And in an environment where rates had gotten so low and the value of bonds overstretched, there's really nowhere but down for them to go, and you're seeing that play out. So,
Yeah, this is brutal. And the worst part about it is the almost perfect correlation all year long. I mean, the lines move almost identically. I mean, they put in peaks right around the same time, they put in bottoms right around the same time, they go up together, they go down together, they go sideways together. That is not how you diversify a portfolio. You want them to move in opposite directions, or no correlation at all would be even better. Sometimes they go up together, sometimes they're opposite, and have it change a lot. That would be a better way to diversify. But these are like, I didn't do a correlation study on them. I should do that really fast. And it might take me too long, but it's probably like 80% or better, zero point 0.8, which
yeah,
is very high correlation. What you want is zero, right? You don't, or a negative number, but you don't want high positive correlation.
no,
That's not how you diversify a portfolio at all.
no. And there's a lot of tools out there. If you really dig into it, there's other ways besides structuring a portfolio like this. You can use options, different stocks, commodities, but just blindly following this strategy, if you did that or your advisor did that this year, did not work out well. So, um,
Yeah, it's
yeah,
78%, but 0.78. I told you it was going to be about zero point 0.8. So that's over the last 90 days, by the way, is 0.78
yeah,
for LQD and SPY. So they're very highly correlated. That's not how you diversify a portfolio.
nope. So, and then if we're just looking at kind of the impact of inflation, the general consumer, all that right now. If you're trying to buy real estate, paying about 6.4% for a 30-year, and that's a
Better than
lot to pay
7.
right now.
Better than 7.
Yeah, better than 7.
That's what I said.
So,
So last week, I think on the call, I said, hey, interest rates coming back down from over 7% to 6.27, I think they were last week when we did this call. I
mhm.
said that's gonna help stabilize home prices. I mean, home prices were in like full on crash mode, but as interest rates drop, people drop the price of their house more slowly. Buyers are more interested in maybe going, hey, I better buy a house now. Well, I can get my mortgage for 6.2 instead of 6.4 or over 7. And that stabilizes a drop in home prices. And I kind of thought we would see that in the data. I speculated. I'm pretty sure last week is when I mentioned that last. Um, and now, we're seeing a little tick higher in mortgage rates, but still, below 7%, down a fair amount from where we were a few weeks ago. And if you want to go ahead to the next slide, you will see that home prices rose by 8.6% in October is the most recent data we had for October. And it was projecting to drop by 8.2. So they didn't fall by as much as expected, basically, or growth didn't slow by as much as expected. And that's kind of what I suspected we would see. And as we go forward, for November and December, when we start seeing those, the impact of the mortgage rate pulling back from over 7%, I think that's gonna, slow even further or grow even faster, depending on how you want to look at it. But home prices are not coming down fast enough to have a material impact on inflation, not
Yeah,
getting anywhere near the 2% level that the Fed wants it to be at. And home shelter, that kind of stuff is like, I think it's like 40% of CPI. So it's a very big proportion. And it's still, over 8% by itself. So that's going to have a big impact on inflation staying high for longer and rates staying higher for longer. And that's going to keep putting pressure on the stock market.
it is. So we'll see there, but those prices need to come down, and it'll
Better than
probably,
20%, right?
yeah, better than 20%, but it's probably just a little slower, so it'll take some time to work its way through. But here's a big one. So M2 money supply, finally a little bit of a breather. That's just a blip on the screen from my perspective, but less money sloshing around the economy
But there are
should
no
help
other
out.
blips on the screen like that. That's what should scare the heck out of you and everybody else watching this. Do you see any other moments going back to the beginning of when the Fed started keeping track of this stat as far as this chart goes? I think you can actually get the M2 going back a little bit further, but this was as far back as I could go on the St. Louis Fed's website.
Hmm.
So it goes back, to what, late 1970s, it looks like, probably. Um, maybe even mid 60s. I don't know what that date is. I should go look.
Yeah.
Um,
One
but
thing
do you see any other pullbacks in M2s like
I
at
d
all?
I don't, but one thing I'm curious about. So this is in billions of dollars. If you were to do it as a logarithmic chart, so doing the relative change rather than, because back here $1 would make this chart move a lot more than $1 here today.
Mm-hmm.
Uh, I don't know if that would impact anything, or Shane, if you had a chance to look at that, but yeah, I'd be
I'm
curious
gonna
just to
I'm gonna
understand
pull
the
it up right now. I'm gonna see if I can get it. Number one, it goes back to, oh, it's only 1980. That's the max. Is that right? Yep. 1980 is the far left side of that chart. November 3rd, 1980. I think you can get the data back to the mid 60s though. I don't know. I could be wrong, but I think you can get it somewhere. And I can't seem to change it to a log chart on here. Not on the St. Louis Fed's website anyway. I bet you I can do it in TradingView, M2, but TradingView I think is only updated through. It's there. Let's see. Logarithmic chart. Nope. It's still the only game in town, man.
interesting.
Yeah, it's still the only game in town as far as a pullback is concerned. You don't see another one at all in the history. Oh, wow. And by the way, TradingView has the data back to 1959.
Impressive.
Um, but there's literally no other pullback the entire time. Nothing even close to what you're seeing. And I'm looking at logarithmic, so well, maybe we'll share that next time. But yeah, this is it's unprecedented, man, and it's honestly a little terrifying. Like I think it's needed and necessary, and I think this, all the money that they've pumped into the economy since COVID should really come out. If this thing drops all the way back to where it was in 2020, before that most recent little tiny gray bar of recession, um, oh man, I don't know. I don't even know where the stock market would be if that happened. But the only reason the stock market keeps going up is because the Fed continues to print all this money and puts it into the economy. And
Hmm.
now, for the first time ever, like really ever, there's a decline in the money out there. Like if you ever hear people say, "Oh, there's too much cash on the sidelines," well, that cash is coming out now, and it's just the Fed's taking it in through letting their bonds mature, and they're taking that money and lighting it on fire. It's no longer in circulation. It's no longer in somebody's bank account to buy Apple or Tesla or speculate on some dumb thing that's never going to happen with. Like that, if that money's not there, it can't be invested in stocks, and that is going to continue to put pressure on the stock market until they stop doing it. And dude, there's a long way to go. I mean, trillions of dollars that needs to come out of this market in order to actually combat inflation. And there's no other way to do it. There just isn't.
Yeah.
I don't care what the modern monetary I don't care what kind of name they make up. There's no other way to do it.
Yep. And turning to, well, how does that impact the market? This chart, this is circulated, Twitter and I'm sure other financial media quite a bit, but just an overlay of the 2008 crash to where we are today. And admittedly, this correlation's pretty strong. And
Yeah.
here you are as of today. And I think for me, the biggest point is when you see a market just generally going down like this and you think this is the bottom and all is well, it can get a lot uglier. But then also the psychology is still there. So it could play out similar. I'm not saying it will, but it could. So we'll see. But yeah, it'd be interesting to see it.
Oh man, I don't know. If it works out like this, people are in for it, man. People are in for a wild ride because I don't think anybody's bearish enough. Everybody thinks like, "Oh, market was down in 2020. It's got to bounce back in 2022, sorry. It's got to bounce back next year in 2023. It can't be 2 years in the market that are down." Well, there can be, and when it happens, every other time it's happened, since like World War II, the second year of down performance is worse than the first year of down performance. So, if the market is going to be down again in 2023, it's probably going to be down more than it was this year, which is a crazy thing to think about, but that's exactly what history says. Now, doesn't mean history has to repeat. I'm not saying that's what's going to happen. But I'm saying if the market is down next year, the probabilities say that it will be down more than it was this year.
Yep.
So
So
we'll see.
we'll see.
But that's a terrible. The catalyst for that could easily be that like anybody who has a bunch of long-term gains in their accounts right now and they just want out, they're not going to sell today. They're not going to sell tomorrow and have to pay the capital gains in April of 2023. They're going to sell in January when they don't have to pay the capital gains until April of 2024. So if there's a whole bunch of people out there just like with their finger on the sell button, waiting for January 1st to sell, uh, look out, man, because that's what happened this year, right? Everybody waited. They didn't want to take their gains in 2021, so they waited until January, and the market just out of the gate crapped the bed and never looked back.
Yeah.
So, dude, it could easily happen again. And I think you just have to be prepared for that. We don't have to predict what's going to happen, but we have to be prepared for this possibility.
Yep. And that's the biggest thing. We're not people that predict. We just manage risk. And if this is a possibility, you got to figure out how do you guard against that.
Yep.
So,
Cash, by the way, that's how you do it. Hold a bunch of cash.
yep. So here's one. This is just kind of comedic. And Shane, I'll let you talk to this. But
I mean, I don't know about comedic. It's kind of disgusting. It makes me want to throw up, and it's all true. That's so. none of this is made up. This is all real. This is done by Rand Paul annually. Calls it his Festivus report. But at any rate, I highlighted some of the most ridiculous things. And as it relates to holding cash, I wish these guys would send me, the $482 billion. I'll hold that cash gladly. I'll gladly hold it. Some of these numbers are just mind-boggling. Like interest payments on the debt, I didn't actually highlight, but it's the biggest number on the screen. $475 billion in interest payments on the debt. $475 billion. How many people are in the United States these days?
Gosh, I don't know
You
the
know?
number, but
It's like, 340 million maybe.
yeah, I think that's close.
Uh, that works out to $1,397 per person of interest payments in for the year. That's how much in interest payments just for the year. And every citizen doesn't just have $1,400 sitting in their checking account to pay interest with.
Yeah.
Like if we all actually had to pay that without the government just printing it, it would never happen. And by the way, we are paying for it because the government's printing it, because they printed that much money just to make interest payments on their debt. What does that do to prices when they print money? That's why inflation is 8%, 7+ percent. So like it may not they may not be coming and actually taking the $1,400 out of your account. I wonder if I did that math right. Seems a little low. But anyway, if they were coming in and actually taking that money out of your account, people would freak out. There would be a revolution in this country. But because they just print the money and pass along the cost to us in the form of inflation at the grocery store and the gas station, nobody does anything. It's
Hmm.
just kind of, I don't know, it's frustrating. But anyway, the pictures say it all, man. They spent $3 million watching hamsters fight on steroids over at the NIH. They also injected 6-month-old beagle puppies with cocaine to the tune of $2.3 million. Now, I don't know. I didn't look into it, but when I mentioned this to a buddy of mine, he said there was also some pretty horrendous stuff going on at that in that puppy study that I didn't really know about. But I mean, it's cruel and unusual to inject a 6-month-old with cocaine. I don't care if it's a puppy or a human or a bird or a rat. Like, why would you do that?
Yeah.
Why would anybody like why would you spend $2.3 million doing it? I thought that drug was illegal anyway. Like why are we spending money on illegal drugs? Where'd we buy it from? It's just what a trip. Um I don't get it. Training mice to binge drink alcohol. Like why? What for $1.1 million? Like you could have given what 1,000 people, 10,000 people $1,000 or something, or 1,000 people $10,000 to pay their bills and deal with inflation. Instead, you're feeding booze to mice? What a joke.
Yeah. So interesting stuff and comedic, but part of how that comes in is, ties into our Babylon B article, but it's the pork. So, you know, I thought this one was great, but in reviewing this, went through and I think Johnny had 45 billion allocated for Legos, and the wife had to work on some outfits and maybe some other cute items to decorate the house. So just a
Man,
good laugh.
Not the Bee had a ridiculous headline on Legos, by the way. You mentioned Legos today. Go check that out if you're interested. Not the Bee Legos. If you Google that, I'm sure you'll find it. Um, but yeah, if you ever wondered how do they read? How does everybody in Congress who has to vote on the passage of a bill, how do they read 4,000 plus pages or whatever, the most recent funding bill was? I don't know how, I don't, maybe it was 4,155. I don't know. I didn't look, don't care. Um, but how do they all read it before they have to vote on it?
Yeah, they
You
don't.
know, they don't read it. They just vote on it. They don't read it. You can't read that many pages and comprehend even a a respectable portion of it in the amount of time given before you actually have to vote on things. And heaven forbid these people just put their foot down and say, I can't vote on something I don't know anything about or understand. No, they can't do that. They just got to vote, and they got to vote by what their party tells them to do. It's obnoxious. I wish these people would do their jobs. Anyway, it is a funny headline, so it's not that I can't laugh at it. I just get so upset about the government waste. It's just disgusting.
Agreed.
Um,
So
anyway, that's it. I think we probably talked for a little bit too long today, but I was having fun, and it's the end of the year. It's the last Elevate chat of the year. When did we do the first one?
I think this started, I don't know the exact date, but I think it was back in April. So
Was it April?
it's been a good first year. Hopefully it keeps growing, and love any feedback people provide. Please like, subscribe, do all that. But
Share with your friends, all that.
yeah,
Yeah, it's good
so
stuff.
awesome. Well, Shane, it's been a good year, and I will see you in 2023.
Yeah, happy New Year, and keep your wife in line on her proposed budget for 2023. All right.
You do the same.
All right, man.
All right.
Thanks. See ya.
Bye.